How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for September 18, 2018. Here are the positions that were being held by the institutions as of that date. Okay, so let's take a look here at gold and see what is taking place. So as mentioned on the latest report, this data we have to look at and be careful with how we judge it, simply because there was a transition from old contracts to new contracts taking place with the currencies. So we're going to see some shifts in positions that look somewhat out of place, and that's exactly the reason why they are out of place. So, let's first take a look here at gold. Now, we can tell that the institutions are holding a very aggressive short position, right, by looking at the coloration of the cells. And this past week, during this consolidation here, we see an increase in shorts from 205 to 208,000. But that doesn't tell us much, because if you take a look here, just a few weeks back, we had highs of 222, down to 210, up to 213, down to 205. Bottom line, since this drop here, we've seen a reduction in shorts. Okay, and during the same time, you have longs at 213, and so basically a reduction in longs as well. So what is going to take place? Now, I've mentioned this already previously, and I made a journal entry on the website regarding what has typically taken place in the past whenever the institutions were holding such positions. So just based on that, there is this idea that there's a better chance of price heading up higher than lower. So I encourage you to take a look at that entry. Just scanning through my journal entries to show you where it is. Right here. Gold and dollar suggest a reversal is coming. So in this journal entry, I posted some of the analysis I was doing and what typically was happening every time gold was very aggressive with their shorts. So I encourage you to have a look at that when you get a chance. Okay. So moving forward, let's take a look at oil. Now, oil pausing, and we see a decrease in longs, and we also see a decrease in shorts. So both sides decreasing. Positions were shifted in such a way that it increased the long exposure by 1%, but net positions have been decreasing. Overall, big drop in net positions from the 700s down to mid or just under mid 500s. So I think there's a good chance, like I've been saying, that we get price to drop, but the data isn't really suggesting that that's going to happen at this point. We do know that at these highs we are expecting some profit taking, and that has taken place since these numbers here. But we have yet to see any real strong indication that there's going to be a bigger drop like this. So I continue to watch this one and wait to see of any signs that that is going to be what is going to take place. Otherwise, if it doesn't take place, we can see a move higher like this. So right now, nothing tradable, and the data doesn't suggest any specific moves. Taking a look here at the US dollar, we can see that longs increased from 44,000 to 47,000. So a nice big increase, but not so much out of line with what we were expecting. And if you take a look here, not much of a move. Bottom line is the long exposure goes up 1 point, and net positions up about 3,000 positions. That came as price dropped and broke right through the weekly area of demand that we were expecting to have broken through. So that opens up the doorway for a bigger move to the downside. Is that going to take place based on looking at the data? Well, we wouldn't see any indication of that. Well, we don't see any indication. And over the last few weeks, all that's been happening is shorts have become cooler, right? But I don't believe it's the US dollar that's leading the markets. And that's why looking at the data here for any indication of what's going to take place here is going to be difficult to do. So, taking a look here, longs are aggressive, more room to add more, so bigger move to the upside is what is to be expected, and they have lots of room to add more positions to cause that to happen. Okay, so let's take a look now at the Aussie. So here's what I was talking to you about. So we had a big shift in positions, right, from 31,000 to 48, and then all of a sudden, boom, down to 26. Whereas if you look at shorts, you could tell that they made their moves before the contracts ended and the new contracts began, and not much of a change. 75, big increase to 92, and a small increase to 94. Bottom line is the sentiment is still bearish, and this happened as price was consolidating down here. We have since seen a move to the upside straight into some supply. Bottom line, shorts are aggressive, longs are cooled off, expecting further move down at some point in time. US CAD. So taking a look here, we are reacting from the monthly area of supply, and longs are somewhat aggressive. Shorts are getting even more cooled off as price starts to head down deeper within the tested weekly area of demand. Net positions increase from positive 26 to 30,000, and you can tell by the coloration of cells we were somewhat neutral here, slightly getting into more of a bullish territory, which is a good sign because I do believe we are going to see price head even higher. When that's going to take place really does depend on the other markets fulfilling their moves, and then eventually the dollar finding and building a foundation, and then creating a move to the upside. That has yet to happen. So I think that positions here are just a representation of the institution preparing for that. We saw them accumulating that long, taking profits, reducing as price dropped, and I think eventually they'll start accumulating again for a move to the upside. US Swiss franc, we're seeing the same thing here. As price drops here, they're reducing longs from very aggressive. Okay, dropping. Bottom line is shorts remain cooled off. We're in neutral territories simply because of the big reduction in longs. In fact, if you take a look at the difference from this 43 to 28, there is quite a significant move here, and I believe that that's because of the contract expiring. Next month or next week we'll have a better indication with looking at the positions. Might be jumping back up to maybe 38 or 39,000. So we'll see a big increase in longs happening there. So still along the lines of what we're seeing with the US CAD, that a big drop has happened, or a drop has happened, and some profit taking on longs, but eventually I believe they're going to start accumulating. I mean, we're heading right into this monthly area demand. Accumulating along here for a bigger move to the upside is what I'm expecting to see on the charts. Euro US dollar, what do we see here? So a slight increase in longs and an increase in shorts, and that was as price was consolidating right before taking out that weekly area of supply. 50-50 right now, and sentiment is neutral, which is good. It should be neutral. We've been looking at these long positions for quite some time and been wondering when they are going to take more profits on those longs. So we can see slowly they've been doing that. And I believe this move to the upside is to help facilitate even more of those closures of the long positions. So watching to see what takes place, because even though this weekly area of supply has been taken out, we are still in consolidation here on this chart, so it can move all the way up or it can stop here. A lot of things can happen. Momentum right now is to the upside, so let's see if that momentum does continue. Pound US dollar, big shift from longs, 65 to 32. Again, I believe that's because of the switch of the contracts. So this number is to be taken with a grain of salt. Short exposure from 66 to 77. It's probably more around between the 66 and 70 range, not as high as 77. Next week we'll look at the data and we'll see for sure. So this number also, I have to be careful paying attention to that. What we did know was that total positions were aggressive. Shorts were 140,000, so some profit taking was expected, and that's exactly what happened. 140 to 112 reduction, and I think we're going to see more upside simply because of where the price is. We could see even more downside, it's possible, because we are in consolidation, so anything can really take place. But I think longer term we're going to see a move higher on this chart. But to be 100% sure, we want to see the longs being aggressively accumulated again. Right now, they're slowly doing that, but not at levels that I'd like to see to solidify this idea of a move up on the charts. Okay, US dollar, Japanese yen held weekly area of demand extremely well. Longs aggressive during this time, an increase in longs here. I think it's not out of line with what was expected. So here a slight increase in shorts, long exposure up 2 points, so solidifying a little bit more bullishness here, and that position's up by about 10,000, which is pretty significant. So I think this is going to be waiting on the US dollar, but it's ready to jet right up to the upside like this. Once the US dollar establishes its footing, I think we're going to see a massive move like this on this pair. So I will be waiting for the right setups, and then I'll be taking advantage of that when it does take place. Kiwi. What do we see here? Shorts closed or longs closed, reduced. I think that might be a little bit out of line, but we'll see next week. Slight increase in shorts. Bearishness still remains the key here. Similar to the Aussie chart, lots of supply in between price now and higher, so I think we're going to see a further move to the downside. Alright, there you have it. That's the CFTC report for this week. Hope you guys are going to use this to prepare yourself for your trades. And until next time, have yourself a good trading week. Take care.